Hello, everyone. Welcome to the official first video in the 8 trading course, which we will be going through all of the basics and how retail versus smart money, how we trade, and more in depth on smart money, not just the normal concepts and everything, and explaining retail mindset versus our mindset, how we trade here at 8 Trading. So let's just get started. So essentially, everyone knows the basics. Everything that you get from baby pips, such as trend lines, Fibonacci pullbacks. As you can see, ours are different, and we'll get into that later in the course. You have patterns such as head and shoulders, right? Double tops, double bottoms, inverse head and shoulders, and so much more. But here at 8 Trading, we need to completely disregard everything we've ever learned and completely clear our minds and just disregard everything we've ever learned, ever been taught in the market, because it's simply false and not true. There's a reason why in the market, things such as trend lines get broken, or they get broken and retested, or sometimes they fail to retest. Break and retest failed, support resistance fails, patterns sometimes don't fail, sometimes you get a head and shoulders. And then what does price do? Right? Clear something called liquidity, which we'll get into later in this course. We break a high and you think that's a Fibonacci pullback, and it'll hit one of our order blocks, which again we'll get into later in the course, and price will just completely fly. So it's completely rewiring your brain and how you see everything in the market and how you view each and every single candle, because each and every single candle has a story behind it with timing and how prices formed and how each candle represents a specific order and how each thing was placed in the market. So, for example, in the market and what you've probably learned on baby pips and whatnot, you'll have examples such as the market is forming higher highs, higher lows, higher highs, higher lows. And you're taught to buy on that break and retest, and you add confluence. You'll have a trend line, you have a Fibonacci pullback. Let's say you had a double bottom over here, right? Higher high, higher low, higher high, higher low. But you're not aware of where price is in the market. So what happens? Price comes down, pulls back up, right? It's there. And then what happens? Melts. And sometimes you're thinking, oh, let me get a break and retest to sell off that trend line. But price does what? Comes back, stops you out, clears this high, hits that high. And then you're looking to buy again, price melts again. Little did you know this was a run on liquidity, a breaking structure, pull back to an order block, another breakdown, and then momentum shift, right? Market is shifting sentiment and everything is just changing. Pulls back, clears internal liquidity, melts, clears external, right? Which again, we'll get all into later in the course. But this is just to show you retail and the average person's mindset versus how the market truly works and how the market is truly depicted and what those candles mean. So while you're looking at a head and shoulders, we're looking at what the candles are actually forming rather than some made up pattern in the market, because all those banks and financial institutions, they don't use any type of pattern, any type of indicator, none of that. The market is simply based off liquidity, and that's it. And it's how the market moves. Liquidity is orders, and that's what we're trading. We're not trading head and shoulders, we're not trading trend lines. We're trading, for example, this is gold. So gold versus the US dollar, which is orders, right? Who's selling gold versus the dollar? Who's selling the dollar versus gold? And what is each candle showing you, right? For example, and we'll get into it later in the course, you have liquidity points and how the market is really moving versus someone who would mark it up, potentially like this. Oh, sorry, let me clear this for you. For example, right, retail mindset. What do you have here? A channel, right? Not saying everyone would see it like this. It's just like what a normal person would see, right? And I know you guys have the fib pullback, right? All these coordinates on it, right? So you probably have this whole fib leg, you'd have a channel. And what do you have here? You have confluence. You have a 618 and a trend line set up. Also, what else do you have? Supply, you have, support resistance, supply demand. You have a higher high. Support turned to resistance. And a lot of people are looking to buy. So what happens in the retail world? Also, what is this? Double bottom. Okay, we got stopped out. Okay, now let's switch our bias, right? Let's switch our bias. Break and retest of a trend line. So we're looking for a break and retest of a trend line and, looking at that potential support zone and this resistance zone. So what is price doing? We switch our narrative. We have the fib, break and retest. We're probably looking to sell on one of the lower fib levels. Boom, we get stopped out or we're in drawdown, right? So at this point, we're just gambling because we don't know which way the market's actually trying to dispense to, which way it's trying to dispose to. Meanwhile, how we trade, we already know exactly what the market's doing. And it was in the gold breakdown I did. I called it to a T where it touched here and then pulled back down to run this low. So at this point, you could be potentially switching biases again, like, oh, this support held, right? That support held. And now what are we doing? We're waiting for break and retest to this resistance zone. And at this point, you're simply gambling the market. You have no idea what the market is truly and actually doing, right? So I apologize. Let me go to my chart. I have it, right? As opposed to here, you know exactly everything that's going to happen in the market, and we'll explain every little detail in the course. This was a trade, I called out the buys from here, and that led into the sales, which is in the breakdown video, right? Run on liquidity, break of internal structure, clearing out liquidity. It has to come to an external point because this is at an external point. So we know we have to run that low. Price pulls back to our order block that ran liquidity. And then we have multiple breaks in structure on an internal level, pull back with New York open and London open. And then where does it target? That low, right? And we'll get all into this, but it's rewiring your brain to see this as an order that ran liquidity, broke down as a BFI footprint, which is Bank of Financial Institution footprint, pull back to their block, which is where they place that actual order. And again, we'll get into what an order block is later in the video and how the market was predisposed to go lower and how this was all liquidity buildup as opposed to structural points, playing off trend lines and patterns, support resistance. And a lot of people say, oh, this is a ranging market. This is consolidation, when it's really not. It's building up to dispense to where price truly has to go. So please take this video, watch it 2-3 times, take notes, completely rewire your brain and how you're thinking, listen to what we're telling you, and take everything you ever learned and throw it away. There's a reason it hasn't worked and you haven't been profitable, because it's just a false sense of how the market truly works when that's not how it works, right? I used to trade retail and I would always be so lost, like so confused, like what, like just why, like nothing ever made sense. And it's because we're looking at the market as how we see it versus how it's truly moving and how the creators of it are looking at it. So I hope you guys enjoy this video. Just let go of everything you've learned in the past, open your mind, try something different. See how you can completely rewire your brain and your thinking to looking at each candle that it's actually telling a story versus some random patterns in the market. So hope you guys enjoy this video, and I'll see you in the next one.